Hey, real estate agents. Want a place to showcase your listings? You can now feature your listings on HomeGain.com for 3 months for free. Your listings will be featured in an exclusive and ad-free environment on HomeGain.com. You will also get a free blogging platform from HomeGain that you can use to position yourself as the top agent in your market area. To start your free trial HomeGain membership, call 866-512-7913 to speak to a HomeGain representative. That's 866-512-7913.
You're listening to Real Estate Radio Washington, D.C. Metro with local expert Ryan Sloper. Now, here is Ryan.
Welcome back, Washington, D.C. Metro, to Ryan Sloper's Real Estate Radio. And I'm joined today by Cammarosano, the general manager of HomeGain. Real Estate Radio is designed to build the Washington, D.C. Metro's market by giving you good, free advice. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030. So I know a lot of you out there are having trouble obtaining a mortgage, and I want to kind of give you guys some good pointers of what you can do to help your chances in getting qualified. I know it was, I want to say it was the Federal Reserve had said that nearly a quarter of people who apply for loans are turned down. And that good borrowers with one or two blemishes on their credit are being denied. And the denial rates only tell half of the story because many of the potential buyers aren't even applying for loans because they assume they can't get one. Why this is so interesting to me is that, I think that it's kind of people brainwashing people into thinking that they can't get qualified. You have government programs like the FHA program that's out there where you only need a minimum of a 640 credit score. So I'm not really sure. Obviously, for a conventional loan, you need higher credit scores, and if, like 680 or above, but for an FHA, it's 640. And I'm not really sure why people think that they can't obtain a mortgage. And let's just say that somebody has a 560 score, and they're like, well, my lease is coming due, and I really don't think that I'm going to be able to buy in the next year because I have a 560, I need a 640. Well, I want to give you guys a little story because one of my clients, as of 2 months ago, was in a similar situation, and she had came to me and she was like, Ryan, I'm leasing right now. I don't know. I don't think I can buy, but I just wanted to see, what my options are at this point, if there's any. And I said, okay. So we sat down, we checked the credit out. She had basically a 560 score, had a few minor dings here and there, a couple collections and stuff. And the interesting part is that I wasn't really too worried. I felt like if we paired her with the right credit repair company, basically one that, I've received results from nonstop, that she would be able to turn this around in 30, 60, 90 days. So the collections are a tricky thing because a lot of people think, hey, if I have collections on there and I'm obtaining a mortgage, what do? Do I go and run and pay them off? Well, that's actually the worst thing you can do. When you pay off a collection, it actually goes as a closed account when you close it, but it then repopulates that you now have paid a derogatory item. So that derogatory item then hits again, which typically will lower your credit score. So the strategy and the plan that we put in place for her is that we actually, the credit repair company and we got together and we said, well, here's a couple collections. We don't want to pay these off and close these because it's going to bring your score down further, and we need your score to come up. So we actually went in, negotiated with each of these companies, these creditors, and said, hey, can we pay for deletion instead of pay to close? Now, a lot of people don't know, a lot of you out there don't know that this is an option that's available to you where you can actually negotiate with the creditor to delete the item off once you have paid them. Well, in her case, we paid, I believe it was 2 or 3 different collections. We paid for deletion. 45 days later, her middle score went from a 563 to a 654. Now, a lot of you may think, okay, well, that's great. And, well, for her, and 45 days later, she was going to be out of her lease in 60 days. So I was able to get her from leasing to a first-time home buyer, now moving into a new condo, and her payment was going to be about the same as what she was paying in rent before. And all that was just because she came and just said, hey, what can you do for me? I really don't think I can do anything. And I think that that's why these Fed numbers are saying a quarter of the borrowers are turned away, is because, yes, when you go to the big banks, when you go to your I'm not just singling out any banks here, but let's just say Wells Fargo, Bank of America, when you go to those, a lot of the people that are actually taking the applications, they're not seasoned veterans when it comes to loan, and they're not really willing to work with you to fix your credit up. And everybody knows that bills are mounting right now. I mean, it's not the best of economic times. So there is a lot of different approaches that you can take to get your credit scores up. And Louis, it's interesting because, the way these statistics are, and then we always talk about how many new home sales or existing home sales are taking place, it'd be interesting to see how many people are being turned down right now. And if we could actually go in and work with, the quarter that are getting turned down and turn that, and split that in half because we're working with somebody for 30, 60, 90 days, this housing market would probably turn around a lot quicker.
That's true, but what I think is happening is, first of all, you've got a lot of people who do have lower credit scores than they had. The whole pool, the average has been lowered.
Exactly.
Okay, there's also a less of an incentive to purchase because the reason people were buying homes like hotcakes was they were expecting price appreciation.
Yep.
That's been removed out of the equation. But now for the purchaser who legitimately wants to buy a home, not because they're expecting price appreciation, because it just makes sense, because it's cheaper to buy than rent, or they really want the house, you're right, they get discouraged because, again, they're not aware of what they can do.
Yep.
Because they're not in this market. They're certainly not in the credit market that often. And then again, you say they walk into their local bank and they tell them no. They say, well, that's the end of it. So really, you're providing a good service, great service to help people who really do want to buy a home, the determined buyer. There is a way to do it. But that information is not out there. That's not the information that you hear. You hear the basic information. So most people make assumptions based on limited information. Well, I guess I'm shut out.
Exactly, and that's the whole premise of Real Estate Radio and our show is to educate consumers on, what their options are. 877-245-2030, 877-245-2030. Not to mention, Louis, that they're reading articles like CNN Money that say prices are low, mortgages cheap, but you can't get one.
Exactly.
I mean, if somebody goes and gets their credit report pulled 2 days ago and it's a 520, and then they turn around and see this article, they're basically what? They're saying, I can't buy for the next 3 or 4 years.
Well, the other thing that harms, there's always an unintended consequences to the government doing something that they think is good. The first-time homebuyer credit, well, now that it's expired, if you're a first-time homebuyer, you figure you missed the bus, you're not going to buy a house.
Yep, I know. And it's interesting that you brought up that first-time homebuyer credit because that's one of the things that I wanted to jump into. For certain members of the government and for qualified military personnel, this is basically your last chance. We're about 3 weeks left to capitalize on this $8,000 cash back with the federal homebuyer tax credit. I know a lot of people, think that that's over. It still does qualify for certain military and government personnel. And a lot of the questions that I've had is, who gets that tax credit? For most Americans, that tax credit expired April 2010. However, when it was drafted, Congress wanted to make sure that the deployed employees of the government and military were given an equal chance to cash in. So it was written that members of the uniformed services, members of the Foreign Service, and intelligence community employees who served at least 90 days of qualified extended duty service outside the United States between January 1, 2009 and April 30, 2010 would be granted a 12-month extension. Spouses of persons meeting that criteria are eligible as well. So a lot of military people out there right now, or spouses of military out there right now, it is still, I want to say it kind of is free money. I mean, it really isn't, but it is still that they're giving up to $8,000 cash back. Now, a lot of people think that you just get this tax credit regardless at $8,000, and that's not true either. It's actually, its tax credit is capped at 10% of the home's purchase price. So a home that sells to a first-time home buyer for less than $80,000, therefore, wouldn't get that full refund of the $8,000, but a smaller amount. Furthermore, there's income caps and restrictions on that. So if you are a single filer and you make less than $125,000, you can get 100% of that tax credit. And then it's kind of prorated down. If you make over a single filer over $145,000, you don't get anything with that tax credit. And joint filers for the 100% is $225,500. Furthermore, if you qualify for the tax credit, your home may not, and there's a couple things that fall into that category, which are homes acquired from a mother, father, spouse, or child, homes acquired from an entity in which you are a majority owner, homes acquired by gift or inheritance, homes for which the primary buyer is under 18 years old, homes for which the purchase price exceeds $800,000, and homes intended to be used as a second home or vacation home or investment home. Now, these are kind of the rules. I mean, a lot of people just kind of, once again, the media pushes out there that there's still this tax credit that's looming, but you need to make sure that you do all your due diligence and research this to make sure that, you're not just buying a home because of this $8,000 credit. Because, Lewis, as you and I know, there was a lot of people out there that were buying this home just for this credit. And I don't want that to be the case now. It still is out there, so if you plan on purchasing, it would make sense to get under contract in the next 3 weeks if you can. And if you still have any questions at this point, you can actually ask the IRS for answers. They actually have they built a bizarre scenario, frequently asked questions, which has a lot of scenarios as far as couples getting married, divorced, and separated, and it also includes some flipping and various renting homeowner scenarios that you guys can check out at the IRS's website. So I would highly encourage you guys to do that. And if you just want to reach out to me, 877-245-2030, I can gladly point you in the right direction or answer any questions that you guys may have. It's 877-245-2030. Now, when we come back, we're going to jump into some of the emails of the last 2 weeks from listeners that have been emailing in. So stay right there. We'll be right back.